Yo, what's up guys? I'm not gonna lie, I might have to close this trade being that 1 hour candle is failing to break this low. You see
Woo-wee! All right.
What's up traders, welcome back to the channel. Today we're going to break down one of the most overlooked yet powerful concepts, and that is using market structure to determine take profit levels. Too many traders, they rely on random targets, 1 to 2, 1 to 3, 1 to 4, 1 to 6 risk to reward ratio. Ratios are important, but using round numbers or necessarily a fixed ratio every time isn't the way to set your profit targets. The market doesn't care about that. The market cares about its structure, market structure. So I'm going to show you guys how to use this and utilize this to make sure that you're hitting your take profits every time. In this video, I'm going to reveal to you guys how to determine and find market structure where the smart money is going to be taking their profits using swing highs and swing lows on the higher time frame. Also areas where you'll notice the market open and close on the higher time frame. So stay tuned guys, make sure you're paying attention, take notes, like and subscribe so I can bring you guys more content for free that'll be valuable to you. And what's really great about the concept we're going to be going over today is that you can apply this to every strategy, whether you're trading SMC, ICT, ICC, any type of strategy. This is going to be a concept that you're going to need to stay consistent and profitable. So make sure you tap in. Let's get right to the charts. All right, guys. So we're on the charts now. We're covering how market structure can determine, you can use market structure to determine take profit levels. Market structure basically is going to be your framework or overall layout of price movement. It's going to help you to understand how the market's behaving, whether it's trending, consolidating, transitioning. Now, at its core, market structure is defined by a sequence of higher highs, higher lows, or lower lows and lower highs, which determine whether the market is going up or down, right? You have a higher low here, higher low here, higher low here, higher low here, vice versa, right? That's important. You want to be aware of these higher lows and lower highs to get the overall direction, but you want to also look closer. Although we're going to be focusing mainly on the higher time frames, monthly, weekly, daily in particular, you want to look at the areas most relevant to price typically. So if you paid attention to my last video, we made a strong emphasis on training your eyes to look left, right? You're going to be looking left a lot and finding where price is in relation to structure left. So for example, right? Right, we can see that price made a swing high here. It made a swing high here. The most current swing high is at this level right here, 133.73. Now, this is an area we're going to use for take profits, but this is an area that we're going to keep in mind to help us find our overall bias on any particular given day, right? So current market, you can see market came up and rejected this structure, right? So structure is like a magnet. These areas are always going to get filled. They're either going to, one or two things are going to happen. It's either going to get broken or respected, right? And then we also have another piece of structure here. If we look left from all the way over here, all the way over here, you can see this piece of structure coming into play as well, right? And we're on the weekly time frame now. So the weekly time frame is important, right? So although it looks like the market could continue higher, keep in mind that you have structure here as well. So now our job is to find where is the next piece of structure. Where could we go to next, right? Now on the targets, obviously we're not swing trading. Most of us are intraday trading and scalping. You want to go do your targets based on the daily time frame typically, right? So the daily time frame is going to help you to determine where these targets are going to be at. Now, in this scenario, you can see some swing lows here. You can also see this area here where we have an abrupt change of direction. You want to look for abrupt change of directions, and you want to look for daily candles in areas where they open and close almost at the same spot. So this area you can see all the way to the left. You see how price has basically not been able to break this overall area, right? This overall area here. I mean, I wouldn't make this level that big. Typically, I would probably do it like this, right? This would be like almost like a demand zone here. You could call it demand zone. I just call it a market structure, right? It's essentially the same idea. So this would be essentially my next area I would target, this general level, right? I'd probably even put it a little bit higher to where we have the actual point of reaction. So as the days go by, we're going to go ahead and fast forward to see what happens here. So you can see we tested this level. We're kind of consolidating in this range. We go a little bit lower, and then eventually what happens, we reject and we fill this zone. So this is where you would essentially have your take profit, right? And in terms of entries and getting into the nitty gritty, that's another topic for another day. You know, you're going to be going in your lower time frames, like your 4 hour, your 30-minute, and your 5-minute to find an actual entry. You're going to look for a discount in this overall picture. Discount meaning we already covered this prior, but entering on opposing candles. And we're going to look for example, let me digress a little bit. Maybe I'm going too fast, but when I say opposing candles, if you're looking for a bearish setup, you're going to want to enter on a bullish candle, right? For example, like this candle here or this candle here. You'd want to enter on one of these and then take the sell opportunity, right? But what's important also is that, again, you're paying attention to structure, right? We talked about the overall dominant structure where those parts are, but if we look at the lower time frame, like the 4-minute or 4 hour and the 1 hour, we can see some structure points here where price came, we broke, we kind of came back into this price range here, broke back lower again, we failed to break this structure here once again, and we sold off. So entering on an opposing candle, a bullish candle such as here or here, would give us our opportunity to sell off. Right, so that's how we would take advantage of structure, market structure. So let me show you another example. So I'm going to go back because this is almost coming into now where we have today's current market, right? So this is like actual price action going on right now. We have Powell's speech coming on in a little bit, so market is actually rejecting this area once again, failing to break. Now we do have this structure right above we want to look out for. That there is a chance it could be broken. But let's go to another example that we can kind of back test this a little bit better, right? So I don't know, let's just fast forward or rewind way back here. So we're going to go back to the weekly time frame. We're going to figure out where are our targets, right? So we have this area here where we have this abrupt change in market structure, right? Or abrupt kind of change in direction where we have a weekly open and close. This is an area that we could be looking to fill. We have this area right here that price is currently above. So we could say, okay, look, as long as we maintain above this level where we have this structure, which is also lining up with structure left, we should be able to continue bullish, right? We can go to the daily time frame, look left, and you see this swing here, daily open and close here, daily open and close here. This is another level we want to confirm price above before confirming buys, right? And then our target, our first target, I would probably aim for here, 129.47. So this is very far. This is like a swing trade, but this would be more so like an intraday trade as to what we would look for once we can break this first area of structure, right? You can even play the intraday trade off here, right? You see that price came back down, we rejected this area, now we're looking to fill this wick up at this high where we see structure. So that's TP1, TP2. And this is daily time frame again. This is, you know, going to take a little bit more time, but we could break it down to the 1 hour. This is probably like 2 sessions this would take. So here's session 1, New York session, where we already got the rejection, and volume was pretty low in this session. You see the candles really small. So this trade, although it hit both of these areas, was really like overnight. Like it was like late New York, London, and pre-New York the next day. So all within 24 hours, we're able to break both of these structure points. But essentially, you see how price respects these areas. This is where you want to be taking profit, right? And then again, we break and retest this area and price consolidates. So this kind of gives you an idea. You know, you want to look left and always pay attention to structure. This is going to help you find your areas of take profit. You can also layer it with Fibonacci, which we talk about extensively in my free Telegram. You guys could check it in the link below. You guys could see my full breakdown on how I trade, how I get in, how I get out. But this is pretty much the overall video. I mean, I could go over this example over and over again, show you different examples, but the main thing I just want you guys to pay attention to is these swing lows and swing highs on the weekly and daily time frame, even monthly. Monthly will show you relevant areas that we could potentially reject. And that's pretty much it. If you guys found this valuable, like and subscribe. Feel free to join my Telegram, ask any questions. I'm here to help. Till next time, I'll see you in the next video. Peace.